Good evening, everyone. It's a beautiful Sunday that we have over here. Let's get prepared for our next week trades in the stock market. All right, I'm Kelvin here from Wrong and Search, and thank you for joining into this. I hope every one of you, maybe some of you already have your dinners, or maybe some of you are having your dinners. So it doesn't matter. Okay, so I haven't had my dinner, so I'm gonna do this quick and go for dinner here. So let's talk about next week market. So let's get prepared for this. So in the market right now, what we see, okay, yesterday, not yesterday, the last trading days in the market here, we find that index is going down. So, and also majority of the stocks are going down. You can see 400 over plus of losing stocks. Gainers is only 396. So how is the market here? Like I said last week, the market is going to be mixed. So mixed in the sense like they are moving up and down, and then there's not much of uh, one direction from there. And of course, if let's say doesn't mean that there are no stocks that is going to move up higher, but of course there will be stocks that are moving up higher. And for those of you who didn't join our last week, I'm gonna do some brief over here. Is that currently the funds hot money in the market is getting lesser because lesser QE and also interest rate hike. So that's why there are lesser funds are being poured into the stock market. It's not going to be like what happened in 2020 time where super bull, every stock has to move up higher. You can just simply pick one stocks and then the price just move up higher. So in the market, current market right now is that some, of course, we do see some of the small and medium caps or maybe some of the stocks that the big boys, they are attracting buyers aggressively, try to push the price up higher every time just to attract more buyers to come in. So which that is something that you have to be careful of that. And don't jump into it just because basically you might actually hear some of these stocks, they have rumors or maybe people telling you the price is going to move double in 2 to 2 months, 3 to 2 months, 2 to 3 months time, 3 to 2 months time. And then looking at it, then they'll tell you like, oh, they have someone actually tell them they got a very good project, haven't announced yet. So, and of course, they will support it with some of the fundamental studies into it, saying that the company overall, everything is good. They have cash reach, or maybe they have some asset, it's not re-valuation, or maybe some new projects or capital injection, asset transfer into this company and stuff like that. So to support or to some sort of marketing technique to have you believe into it and then jump into it. So if you see any of these stocks, like people ask you to look into it, then you look into the chart and you find that the price is like moving up higher and higher and higher. Then you have to be careful of that because the price might just they might just attracting buyers. I'm not saying that all of stocks, but majority of stocks that they move up higher and higher, then it's actually pretty dangerous in that. For example, maybe probably I'll just share some of it. Last week wise, do we have any of the stocks are going like this? We last week wise, not really, but of course, and some of the stocks actually move like they move up higher and higher and higher. Maybe some of the examples like this, all right? So I'm not saying that this stocks, but the price keep moving up higher and higher and higher and higher, bit by bit, bit by bit, and there's a lot of upper shadows. Then you know that it's not, they are just attracting buyers, churning the volume to get you to come into it. And especially when you see this happen during the day, this is a 5-minute charts. I really switch it to 5-minute charts. When the price is moving up higher, then you start to see the price actually throw down after that. So which means that they attracted enough of buyers coming in. So the next day for this stock, they might push the price up higher in the morning and then they start to throw the price down lower. So these are some of the price movement and volume movement in the 5-minute charts. You have to take note of that, which if you look into traditional technical analysis, you won't see this because they don't look into details into this, how does the price move up and things like that. It doesn't really study the I won't say not the logic, but they make it, it's not so logic about the price and volume movement about it. It's always using the calculation, average out the price and the volume and gauge whether the price actually will move up higher, what is the average price right now. And I don't know who come up with this, assuming the average price is actually the support, which I think that is not the right way to look into it, because we know the big boys, when they push the price up higher, they will try to push the price in the sense of they mark up the price and then attract buyers to come in, and then they throw it down to them to do distribution to sell their shares. So if they do this, so you can't say like the big boys are actually supporting the price on the way up, because they mark up just to sell their shares. So if let's say they do that, they mark up just to sell their shares, you can't use that as a support because they are selling. So if they are selling, who is going to support? Some of you might think like, okay, big boys come back in to accumulate. Yes, for some stock, bigger cap stocks, maybe they will do that. Maybe certain other funds are coming in, and then when they move up higher, other funds are coming in again. That might happen. But for some of the stocks like medium cap or small caps, if let's say not very nice or not very the branding is not that great, then you don't see this, because they will just move for midterm and then they start to press the price down lower. So that's why you can't, the big boys, they won't accumulate on the way up. Instead, they will distribute on the way up because they are holding a lot of shares. So if they accumulate on the way up and sell at one point, who is going to buy, right? So there's not enough buyers in the market for them to sell it out. So that's why they would prefer to take profit on the way up, so that they can average out their profits on the way up. And then after that, when they have lesser shares, then they start to throw the price down lower. So that is how the whole operators process is like. So if you want to know more, you can actually go to our website. Okay, we have some of the videos inside, then you can have a look into it. Wow, I thought I charged the light, so never mind. You're seeing me a bit blue over here. So it's not a great month. I mean, Chinese know that it's not a great month to show my face like this, blue like this. Okay, so yeah, so you have to be careful of it, but it doesn't mean that all stocks in the market you can't look into it. So there are some stocks that you can look into it. Let's say we look into index. Of course, some of the stocks are going down, but we can look into some of the stocks that are moving up. So some of them, they actually move up higher. If let's say they are able to push the price up higher with the high volume right now, is basically telling us that the major rebound is coming into it. So you need to be very precise on selecting your stocks to look into it, whether you want to go for long term or maybe for short term. Those are very important. So of course, we do see like during the day, you need to find like during the day their demands actually comes in. So that actually tells us that they are willing to support the price. So this is how we look into find the support, instead of like drawing the previous low as a support. Because if you use the previous low as a support, it doesn't make sense, because the previous low is where the big boys sell their shares. So how can you use that as a support, right? So, or maybe the previous resistance as the support, it cannot work as well, because that is where the big boys are selling the price down lower. So this is how we look into it. I find it much more logic into it, and of course we have tested it out, we have looked into it. These are all based on our trading experience to find out where is the price going to, like there is some demands is actually coming in. So it might not be having a very huge rebound or very huge price up after that, but at least we know that in this term over here, we can move in for some of the short-term entry, okay, or maybe day trading. So of course, this is just some of my sharing over here. So if you are using this trading method, short-term or maybe day trading method, you need to know how to look into it, knowing where is the best entry, knowing where is the best exit, when, okay, not where, when is the best entry, when is the best exit, and the cut loss point and the position sizing. So you need to have the whole trading plan out. So maybe some of you know that, okay, you have this trading plan in your pocket, but you might not be working. For example, the easiest thing, the simple thing where a lot of people don't look into it is the position sizing and risk management. So usually people in the market, they do position sizing in the sense like they have the same lot size, no, same value for each of the stocks. Every stocks, 1 ringgit to 20 cents, you still use the same value. But if you use this method, then you're entering at a higher, like more position, more units are bought at a cheaper price, and lesser unit are bought at a higher price. So when the price actually start to goes down for the cheaper stocks, then you lose more, because let's say for example you're buying 1,000 unit on that, 1,000 lot in that, so you're losing 1,000 ringgit. So you're buying 100 for 100 lot for 1 ringgit. When the price move up higher, you are making 100 only. So you are not able to offset that kind of losses. So that is one of the very critical mistake that a lot of traders and investors do. So having a not balanced kind of position sizing. That's why they seems like they make money, okay, for some of the stocks, but they are still, at the end of the day, they are still losing money. Even though they have a probability of maybe up to 70% or 60%, they still lose money because the profit is not able to cover the losses. Because once they lose like a few thousand. Once they make profit, they make few hundred. So that is something that you need to look into it. All right. So I believe like some of you might not aware of this. So just to remind guys, this is what we do as a coach to share with you guys. So overall market in this point. But for the current market wise, we know it's a quarterly report, the earnings quarter, where a lot of company are announcing a lot of their quarterly reports. So this it's actually one of our students is very good. Okay, so he found like some of the ways to actually to work in the stock market. So to do it for the day trading. So I actually started training him for day trading for I think past one month or maybe 1.5 months. So right now he's able to actually do his own trading. Just that need to be more do a bit of adjustment, okay, for his exit, then everything is fine. So he found this is that earnings period, we know big boys would not miss out this opportunity when there is a good result coming out. So how do we know that there is a good result coming out? Because when a good result, I think every one of you, if you watch this, you have been trading in the market or invest into the market for a very long time, you'll find that every time there's a good news comes out, the stock price will actually have a jump up, right? So the stock price jump up, so usually morning time, that is when they start to push the price up higher. So you can see from here, they start to push the price up higher. So this is where we can do some of the day trading from it, right? So of course, I say this one, he actually make profit out of it. So I'm very proud of him where just 1.5 months, he's able to learn this up. I think so that's why it's not that difficult to learn. It's actually quite simple. So most importantly is that he didn't use any technical analysis or any indicators or any support line, plotting any resistance line. So traditional way, no, just throw it away. So he used this, he's able to make the profit out of it, okay, take the profit and run. So we can see that the price actually move up higher before the earnings actually comes out for this, actually at about like 12:30. So after that, the price actually goes down lower. So this is the period where we can actually use our intraday trades to make more profit out of it. So you need to know the right time, right market, to use the right way to trade in the stock market. So we are taking this advantage in the market. As a traders or investor, every one of us, we are the same. We are taking opportunity, investment opportunity, returns opportunities. So whether you are dividend investor, same thing. You're looking for capital gain. Because if let's say capital actually goes down lower, the share price goes down, you're still collecting dividend. You are gonna take, how long are you going to collect the dividend in order for you to cover the losses, right? So we need to look into something that is capital gain, and at the same time we have the dividend, receiving the dividend as well. So still up until the end of the day, you are still a capital gain opportunist, I guess. That's the word to look into it. Okay, so right now in this period time, we need to know like what are the earnings are coming out, when do they come out. So usually these earning quarterly reports, they announce after 5 p.m. So after market. So after market, we know what is their result. So when we know their result is out, then we can actually know next day, let's say on tomorrow, we know what we have to look into it. So there's a few stock have a very nice quarterly earnings, and or maybe their earnings, their returns on that, then we're gonna aim for those, okay, for intraday trades. So I'm not saying, I need to clarify this first. I'm not saying that you can invest into it or go in for a short term or long term or mid term, because news, whenever it comes out, every one of us, we know one day price up and then it start to go down lower. So it's better, safer, I find it, to go for intraday trades. And of course, you need to know when is the best timing to move in and when is the best timing to exit. There's no profit target. There's no, for myself, I don't believe in best selling price or best take profit price or best cut loss price. Everything we just follow the transaction, the big boys. Where is the point where they have no intention to push the price up higher? That's where we exit. I think most of you, if you follow my day trading live stream, you know that how I look into it. So most of the time we can actually, one stretch when the price move up, we can actually precise to exit at the close to the high side. It's actually at the high side, because even though the price actually hit 108, like for example at this point hit 108, sometimes you're not able to sell it at 108. Why? Because this 108 is just parking at the, maybe at the sell side. So we don't park our queue our orders there, because once they throw down, you can see very fast they throw the price down lower. So when they throw the price very fast from there, you park there, you cancel, and then you keep on park again at the lower selling price, and then cancel again, park at the lower selling price. You keep on chasing the price down. That's why all your losses is gone, all your profit is gone, and then you might have to cut loss from there. Okay, so that's why if any one of you who do not know how to do day trading, I always say try not to do it. All right, because I know most of the retail investor out there, it's not a habit, just that you have limited knowledge on interpreting the transaction data in the market for you to confidently exit in the market. Because most of us, we are using outdated data or outdated analysis data, because like I say, indicators always lag, or the resistance breakout, after that they start to go down lower. So it doesn't really look into details such of this, how the big boys, whether they have the intention to move the price up higher, right? So I think for those of you who have been watching our live stream, you know how we do it. Okay, so of course, again, if you like our sharing in this, knowing what to focus on for the next day, for the next week, give us a like, share our video out to your friends, and of course, give like our Facebook page, and of course, subscribe to our YouTube channel. All right. So this actually motivates us to do more, because we don't get anything from you out of doing this. Okay. So of course, if let's say you want to learn more about it, tomorrow and on Wednesday, upcoming Wednesday, we have our webinar that is showing they are sharing with you some of the things that the big boys don't want you to know, and why every one of us, we are using the technical analysis is still not working in the market. Like for example, 90% of the retail investor in the market make losses. That's what we always hear. But 90% majority, most of the retail investor in the market, they learn about technical analysis, right? But why these traders or investors, they are still not able to move up to the 10% of the winning investors? The reason is very simple, because 10% is using a different method in that. That's what we are looking into it. All right. So if you don't want to miss out this, go to our Facebook page, okay, and then write it. There's a event link from there. Go there and sign up with it. Click the join event and then sign up the webinar. Or maybe I'll just share the event links to you guys, so that you can have it's easier for you to straight away go to just register there. All right, I find it here. Copy link. I'll share it in the comment section, so you guys can go there and have a look into it. Right? So that is the event page, I mean the webinar that is coming up. So go there and have a look at it, and you will find I'll be sharing in that. So this is something that I think you guys want to know more about it. Okay, go there and have a look. So basically that is the market. So quarterly earnings, everything coming out. So you need to know what is the best way to trade in the stock market in this earnings seasons over here. So earnings seasons coming out, so you look into it. Then if you use the right method, then you can actually use this, make some have some opportunities in the stock market. All right. So that's about it here today. So thank you very much for joining into our live stream. Remember to give us a like, and also remember to join our upcoming webinar, to find out more about what are the big boys that they don't want, the things that they do, and they don't want you to know about this. Okay, so it's on Monday, which is tomorrow, 8:30, and also Wednesday, 8:30 p.m. So whichever day that you can choose, all right? So you don't have to attend both of the days. So choose the one that you are free to enter into it. And of course, share this out to majority of your friends so that they know that this amazing event is coming, how big boys move the stock price that they don't want you to know. All right? So that's about it here today. Thank you very much. Remember to give us a like and share this out to your friends. Okay? Thank you. Bye-bye. Have a great weekend ahead. Weekdays ahead. All right. Bye-bye.
Wrong and search. True traders react to the market.